Hey everybody, welcome to episode number 7 of the Whiteboard series. As you can see, I got a couple of special guests here with me today, Roman and Leo, the R and the L in RL Wealth Management, and they're here to help me kick off the show and then also send you on your way for the weekend. So, Roman, can you tell me what our topic is for today?
Tax loss harvesting.
That's right, we're going to be talking about tax loss harvesting. So before I get into that, I'm going to let these two hop down, and then they'll be back to say bye. Alright, so as Roman mentioned, we're going to be talking about tax loss harvesting, which is just a portfolio management style designed to help minimize taxes when possible. I'm going to give you a high-level look at it today, just the basics of what you might do, why you would do it, and then I'm also going to refer you to a professional to see if it makes sense to do it and how to implement it yourself. So the basics of tax loss harvesting is realizing losses inside of your portfolio to offset gains. So conceptually what you do is you sell an investment that you may be holding inside a taxable account to realize a loss. You can buy back into a similar fund, not the same fund. That's called a wash sale. I'm not going to tell you about that today. I'm not going to give you everything away today. You got to come back and listen to me in the future to learn about wash sales. But you sell your fund, you realize your loss, you buy back into a similar fund, so you're back in the market for growth, but now you've realized this loss. And what is the value of that loss? Well, you can use that loss to offset gains, in a sense minimizing some of the taxes you may be having to pay. So I think an easy way to show that is, let's say that we have $2,000 in taxable gains, but we also did some planning and did some selling to realize $5,000 in losses. Now, we don't like losses, but here's one way that they can actually be valuable to us. So we have $5,000 in losses. $2,000 of those $5,000 in losses will offset the gains, which basically shows that you don't have any gains for the year. And the remaining $3,000 is able to be carried forward indefinitely until you use it all up. Now, you can use these in the future. You're only allowed to use up to $3,000 a year of carry forward losses, but that's still better than nothing. So if you have a year of no losses, you can pull from the bank of carry forward losses to offset some of your gains. And if you have no gains, it can be used to offset income you may have had. So these are very powerful tools that we have in our pocket to use that many aren't using. These types of strategies, tax loss harvesting and selling these funds to create the losses, are only applicable to accounts that are considered taxable accounts. Meaning this is not going to help in your IRA, it's not going to help in your 401k, because there are no gains or losses when you buy or sell. So that doesn't help there. But if you have an account where you get a 1099 every year for dividends and interest and gains and losses, then this is an account that you might be able to use this strategy. At this point, I'm going to refer you to your CPA, to your financial advisor, to a professional to see how does this actually fit into your strategy, how to implement it. Although the concept of it is very easy, the actual implementation is not always as easy. Sometimes there's some things you need to be aware of, little nuances like the wash sale that you need to make sure you're aware of before you actually implement this. But today I just wanted you to know that there's a way to potentially use some losses when they come to offset some gains and help you save taxes. So I hope that that makes sense. Ask your financial advisor if this is something that you should be utilizing. Betterment and some of the robo-advisors actually do this for you out there, but a financial advisor should be able to help you implement this strategy and determine if it makes sense. So I hope you learned a little bit about tax loss harvesting. Kind of a hard thing to say it 3 times fast, I bet you can't. But I'm going to bring the boys back so they can say goodbye. And while they're coming back, I want to give a shout out to Wu-Tang Financial for the shirt that I'm wearing today. It's Casual Friday. I got my boys here today, so I thought I would wear a financial related t-shirt. If you're familiar with Wu-Tang, the group, Cream, Cash Rules Everything Around Me, one of my favorite songs in high school, not because of the money aspect, but I played basketball, and to me, cash was my shot, so I wanted my shot to always go in, so I always said cash. Cash Rules Everything Around Me, had a rubber band, wrote on it. So this shirt is from Wu-Tang Financial. Go follow them on Twitter. They have a great account, but it just says Cash Rules Everything Around Me, except when other investments are providing a better taxable yield. So it's kind of a little joke on the song. So boys, can you tell everybody bye?
Bye.
Thanks for watching. We'll see you at the next one.